One of the biggest mistakes traders make is randomly selecting strike prices and expirations without understanding the option chain. In this video, I'm going to break down exactly how I use Charles Schwab option chain to find precision entries in high probability setups. Discipline, structure, execution. Let's go.
And you have to set these up. So from the Charles Schwab people, you just go to customize, edit your columns, and you turn on the ones that you want to track. This is what I have if y'all want a snapshot. Last is what the last premium price that was paid. So if I got a bid order for $4.55, the last person that paid, they paid $4.65. So you kind of know what last bid price was accepted. You can match that, or you can go lower, or you can go above it. But that kind of lets you know. And that's right here in this column right here. See, that's the last price that was paid. $31.25. Whoever bought a contract last, they paid $31.25. Your price now is $30.10, so you're definitely gonna be paying lower than what they paid, just to give you that idea. But yeah, if you want to customize your columns, like say just come over here and turn these on, and these are the ones I track. All right, we said that 95 was the premium that we was looking for. We just went out 6 months. Everybody can see my screen, right?
Yes.
All right, so right now, 95. Looking at all my data. This here, 52-week high, 52-week low. This is the premium prices that were paid, the highest premium price that was ever paid for this particular contract at that level. Each one is different. $5 was the lowest. You never want to go in at, it's almost like tracking the stock. You never want to go in at the highest premium. So this kind of gives you an idea on selecting your premium price. Because at some point, the premium price will go back up as high as this price right here. And that's what you want. You want enough room to get from where you are now, which is 650, to get up to 10 at least. It could go higher than 10, but right now 10 is the highest. So you're saying that I got at least from 650 to 10 to get there. The lowest has been 5. Now me looking at this, lowest 5, right now it's at 650. I would probably set a limit order for 6. I'm comfortable with 6. And I know I got at least $4 to the upside. That's premium price. Like I said, it could go higher, but right now 10 is the highest. So I got at least $4 to the upside on premium price. And this times 100 times your contracts. Is that thing is moving. Now, like I said, I like to look at the option chain because now you can see everything going on right here. Even though we said 95 was the strike price we want to choose, we know we're going to pay at least $6.50 for that contract. But then you might say, man, that's a little too expensive. Let me see what else is available. Now this 95, keep in mind, look at my columns up here. That's our open interest, deltas, thetas. So that 95, the open interest is $4.95. Now rule of thumb, the reason I also pull up the option chain, because first glance, I'm training my eyes to look at the open interest. Which one everybody's in the most? Somebody put in the chat which one everybody in the most right now. 97.50. That's it. Y'all see that? Strike price 97.50. Come over here to open interest 11.41. See, I have a clear snapshot right now by looking at the chain. I can already see which one is the most. Now, even though we did our work on paper, we have our strike price that we want to attempt to execute on, but also in the options course, it tells you 3 different levels of strike prices to choose. So you do have a window there. And from that window, you selecting the best open interest and start there. I don't always pick the one with the most open interest. Sometimes it's dollar amount and delta to me. But if you're just looking at a clear snapshot of this right here, that's where you'll focus your eyes on right there, because that has the most open interest. And then you go from there. And as you can see, that contract is cheaper, $5.60. But if you want to go with your math on your sheet and go here, that's fine too. Just because less people are in this play doesn't mean it won't work. Because on the flip side, you're going to have a better delta versus theta. So at that point, it's just decision. There's no right or wrong. It's just what's going to optimize the best for you. So this goes back to how much money am I willing to spend? So right here, if I only got $1,000, and this was my strike price of choice, but I want to get 2 contracts, but I only got $1,000. I will pick this one right here, set a limit for $5, pick 2 contracts, and just sit in it until it executes, if it executes. Now, the delta is lower here, but I got 2 contracts. It just depends on how you want to optimize your math. I got 2 contracts here. Or I can just go here. Now, when you pay more, they are going to reward more. So you only got 1 contract here, but it's $650. But if I can get 2 patients, set the limit, because it ain't going to execute right away. It could sit around 560 to 540 to 530 for a minute, but I set my limit for $5 even. So we just got to be patient and wait for it to come down. Sometimes they'll run all the way up, $8. You're like, man, I don't miss the ride. They'll come back down eventually if you want to practice patience. So that's what I do when I look at the options chain. Getting an overall view of the numbers. And then I optimize and choose the best that will work for me and the money I'm trying to spend. Questions? Idris?
Yeah, how you doing?
All right.
I had a question. So, about the volume in the course, he said something about volume, but he never really explained like what is the volume used for, something like that. Like, I'm not too sure like what to do with the volume when I'm looking at it.
Yeah, he did talk about volume in the course, but from my experience, and I've been looking at it, volume is just what's going on at that time.
Mm.
So, like these numbers right here, normally they're at 0 on the weekend because they reset. Now your open interest is just how many contracts out there in that play. So you got contracts open in this play right now, open interest. Volume is just what's going on that day. You might have 1 volume. That just means somebody executing a play on that particular strike.
Oh, so open interest is just like overall, basically the same thing. It's just overall, and volume is just that particular day.
Yeah, exactly.
Oh, okay.
Volume just people in and out that day. So you can kind of gauge, okay, this stock was popular today because over 200 people, bought or sold.
Right.
Now volume is bought or sold, but it's just activity on that strike price that day at that time, or whatever's going on, whenever you look at it, because that number fluctuates throughout the day.
Okay. I appreciate it.
Is that Shanae? You got a question?
Yes, I had a question.
All right.
First of all, thank you so much for taking time on your Sunday to go over this with us. I really appreciate it.
All right.
I'm very, very new to this. Just like a week new. I wanted to know, like, when you were going through entering the call on Charles Schwab, because I use Charles Schwab, is there a way to do that on a simulated environment before like I actually start playing with my real money?
Like paper trade?
Yeah.
There probably is. I'll have to research that because I did not do that. I went straight in.
Went straight in. Okay.
It's on Thinkorswim.
Right. I know it's on Thinkorswim, but it's not as simplified as like what we just did. Like I think Thinkorswim looks very complicated to me.
Yeah, there's a lot going on Thinkorswim. I have that.
Okay.
But I do most of my business right here. Like you said, it's nice and clean and manageable.
Okay. My second question for you is when you enter in the call, how do you exit? Like when you want to exit, what do you do to exit?
All right, so after you get ready to sell, it's going to be by the close. So let me see.
Okay.
So if I wanted to pick this one here,
Where are you? Because I don't see. You're still in the options chain? Because that's what I'm seeing.
yeah, still in the options chain. So
Okay.
if you have Schwab and you was getting ready to execute this play, then this little box up here would pull up.
Okay.
Now this right here is supposed to be buy to open. So just remember that we're doing buy to open.
Right.
To execute this play, click review, and then place the order.
Right.
And that'll tell you how much you pay. Now, if you was trying to get out of the play, sell it, sell to close, STC, sell to close.
Okay, so you just go back to the same order and then you do sell to close to sell it.
Correct.
Into the profits. Okay.
So do you have the app for your phone?
No, I use it on my laptop.
Okay. So if you already in the play and you pull up the stock, it'll ask you to buy or sell, and you just click on sell, and then it'll come here for you to have insert additional options. Now the same way you sell, you're still gonna have these ask and bid prices, except on the ask price is reversed. So they're gonna try to give you the lowest amount. So over here, you wanna, if you're trying to sell it, you're trying to get the most. So it might not execute right away. And that's still doing market and limit. If you want to go ahead and sell it, because you see that it's volatile, it's going up and down. Stock price might be 25. You said, man, when it hit 26, I'm gonna go ahead and sell it. And then you just set your limit order for 26. And then as it's going up and down, once it does hit it, it'll execute automatically, sell to close.
Okay.
Sell to close.
All right, sell to close. Thank you so much. I appreciate it.
All right.